Are you doing what the 90% are doing, or are you different? Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillham, the Chief Analyst at Wealth Within. This week I'll be discussing what it takes to be a day trader, and then in the second half of the recording I will touch on the All Ordinaries Index and other world markets. So what does it take to be a day trader? Well, I began supporting and teaching traders in the 90s, and back then everyone wanted to day trade futures. Today, nothing has changed as the majority still want me to teach them to be a day trader. I find that interesting as I know with 100% certainty none of these people can tell me what a day trader does. When I ask them what they want to achieve, I get answers like, I want to make some extra money, or I want to replace my income. So what has that got to do with day trading? Well, nothing really. It's all great to want to replace or supplement your income, and this is all possible with the right education. However, it's pretty silly to label yourself as a certain type of trader before you even understand what trading is. A well-known statistic is that 90% of traders are unsuccessful. But would it surprise you to know that for day traders, I believe it would be well over 95%. In fact, my guess is that less than 1% of day traders are consistently profitable. So before you put on the shingle saying that you're a day trader, ask yourself if you know what day trading actually is and what it takes to be one. People who desire to supplement or replace their income from trading start by Googling around for trading information and education. This leads them to find fancy websites with images of expensive houses, boats and cars. Websites with that make quick money from very little capital message. You know the type. They show examples of charts of successful trades, making things look quick, easy, and very profitable. Right now we're seeing charts of Bitcoin going from a few dollars to well over $10,000 in a matter of months. And there are thousands of websites on the bandwagon telling everyone that they can teach them to be rich in Bitcoin or foreign exchange trading. To be successful, you just need to find out how to do it the right way and then take massive action. If 90% of traders are not successful, logic says that if you look at what these majority are doing and then don't do it, you stand a chance of being successful yourself. In short, look at what the 90% of websites are promoting and don't do it. So what do you need to be successful? Well, firstly, you need a solid trading plan. Those 90% who fail do so because they fail to plan, or should I say, they don't have a solid tested trading plan at all. The second area you need to be successful is that you need to be committed, and that means having the right attitude. In my experience, those who fail do so because they fail to commit the time and money to developing the right knowledge and skills. There's an old saying that goes like this: what a wise man does in the beginning, a fool does in the end. Every week I have conversations with traders who want us to teach them because they fail to consider the above 2 points. In every case, these traders are inconsistent in their trading. When I ask them about their trading process, where they've learnt, what rules they use, and many other questions, I find that they've followed the path of the 90% who fail. Being different will mean you do what it takes to be a great trader and be part of that 10%. So let me ask you, are you doing what the 90% are doing, or are you different? So let's get into the charts. Okay, let's get into the chart of the Dow Jones Index. This is a monthly bar chart that you've got on your screen right now. I just wanted to show you a couple of things here. So we've got the major low from the March 2009 low there after the GFC, and we've had two sort of major pullbacks on there, and you can see this one back down into October 2011 was 19.56%, and the one going down into August 2015 was 16.46%. But you can see here how the Dow really hasn't had any pullback since or from that period of time in that 2015 low. I mean, this one didn't go lower, so it's not actually it was more of a retest. Sometimes people would call them a dead cat bounce, you know, where it goes up, bang, and comes back down again to the same point. You might have heard them referred to as that, but even that's 2016. So we are due for a lower on the Dow at this point in time. Right now, as you can see with my tool there, it's only 12.29%. It's not quite enough in my book. Generally, you'll see the market in those sort of lows pull back closer to that 15 to 20% in those sorts of periods. So right now, I don't believe we've pulled back far enough on the Dow. Sorry, I just moved the chart on you. I was just trying to get rid of that so you can now see the chart. Just expanding it up a little bit, I've just done the range from that low in 2015. So as I was saying last week, I still believe the market needs to fall down to this sort of 22,320 point, or that 38.2% retracement of that range from that low right up to the high of 26,616. So just measuring that range. Right now, I'll get rid of that tool too, because that's in the road, isn't it? Let me get rid of that. So you can see here the Dow, it did open up at 24,076 earlier this month. It traded down. It's traded back up again at the moment, but it still remains to be seen whether it can stay up and still continue to go up. My guess is it'll break through this blue trend line, come down into this area over the next few months. So right now, still be cautious on the Dow. Don't necessarily jump into stocks at this point in time. Just be a little bit more cautious. Let's get into the Hang Seng now. You can see there out on the left, it had a new all-time high, or had an all-time high 2007, like most markets. It was 31,958, 31,958. And back in January this year, it broke through that to get a high of 33,484. But like a few of the markets around the world, it did pull back from that. Like our market, the Australian market, the Dow fell from January. We're looking at the FTSE also fell as well. So you can see here how February it fell quite heavily, along with other world markets with a 3,900 odd point range. Currently, the opens and close, if I expand this up a little bit, is you can see here how the open of April was below February's low. It did trade down a little bit, unlike the Dow, which traded a little bit more heavily down. That's sort of what's making me think that the Dow is a little bit more bearish than other markets. Currently, it is trading on its high, but it has not traded down to this 38.2%. Asian markets are more volatile than the US market and the European market. So you need to expect that with a volatile market, you can see here the volatility on some of these pullbacks here. You will need to expect that the Hang Seng has quite a good possibility of falling down to that 27,675. So if you are trading Asian markets, just be a little bit more cautious at this point in time. Let's get into the All Ordinaries Index in Australia. My market, I know it very, very well. As you can see here, the market, this is a weekly bar chart on the All Ordinaries Index. Again, it made a high here of 6256, and it's been down since that January. So it's had 12 or 13 weeks down to this point here in April. This is likely to be the 2-year low that I've been looking for on this market. I'm expecting a bit of a move up. I want the move to go through this 50% retracement of the last downward range. I wanted to get up into that 6,000 to 6,100 point sort of level. If it can do that before it comes back down to retest that low, then I think the All Ordinaries Index will be more medium-term bullish. It will be bullish in the second half of the year and into 2019. At this point, again, to me, it's still wait and see at this point in time, because it could just move up to underneath that 50% level and start to fall away and come down to this sort of 50, 600 sort of point level. Let's have a look at the German market, which is the DAX, for people who don't know what that is. You can see here it had its all-time high in January 2018, like a few different markets. It did very, very well to get up at 13,596 points. It's finding a lot of resistance around that 14,000 points, which is one of the levels we predicted, but now it's finding support around this other level of support, which is around just under 12,000 points. You can see here how this low back in 2016, it's doing a beautiful 2-year cycle on this at this point in time. It has fit the criteria for a 2-year low, like the Australian market, coming back down to that 38.2% level at 11,726. And it has got a nice bar. This is a monthly chart, so what I'm expecting here is, again, maybe like the Australian market, 2 to 4 weeks up to see what happens, and then that retest of the low, just to make sure that it stopped falling. So I want to see a retest of that 11,726 low before I would call this as being the end of the 2-year low for the DAX. Lastly, I just want to show you the FTSE in the UK market. Again, you're looking at the FTSE all-time high here. It's had a lot of resistance around that 7,400 point level. It did make a new all-time high. Finally, it took a lot of time for it to do it. You can see here some of those previous all-time highs. It finally broke through into January to make 7,792 points. and since then it's fallen quite heavily. It did fall into that 38.2% level. Quite okay. So again, another market that I'm suggesting may have found its 2-year low and is about to start to move up quite strongly. So more bullish on Australia, more bullish on the FTSE, more bullish on the DAX, less bullish on the Hang Seng, less bullish on the Dow Jones. So that's my charts for this week. Good luck, good trading. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.